just got off the phone with your mortgage lender and you didn't really get that approval amount you wanted to get your dream home, but it's okay. I got 5 ways that you can increase your spending power to get that dream home that you wanted. Way one is you can always lower your DTI. If you're pushing at that cap of that 0.50 DTI ratio, there's some ways you can lower it. So you can lower it by maybe closing out one credit card if you pay it off and close it out. So if you have a high amount of like a minimum payment due for a credit card, you pay that off completely and close it out. That's one way. If you have like a year left on your car note or something like that, maybe hold off on buying a home right now and just make sure that loan gets paid off completely, and that will increase how much you can afford a month. You could even, if you just got a car, let's say a year ago, you have like an 8-year term, you could refinance it maybe or if you have, let's say an 8-year term is the longest term. Let's say if you have a 4-year term or a 3-year term on your car note you just got, you can refinance it into an 8-year term that lowers your monthly rate that you have to pay on that car note, which can increase your monthly affordability you can pay a month on your mortgage. So those are little ways that you can, like, maybe school loans, or if you have any installments with the IRS, get that settled before you actually start looking for a home. All of these things go to your debt to income ratio, which lowers how much you can actually get approved for a loan. Option 2 we have is obviously just make more money, right? Have a higher income, have a higher household income, just make more money, right? Obvious. So I'm gonna try to like give you examples, which you probably don't need. A second job, yeah, but you might have to have it for a couple of months to a year for it to actually count as income. You can't just get a second job a week before you apply for your mortgage and say, hey, this is how much money I made. No, it has to be settled. No, it has to be kind of, yeah, I've been here for a while, I'm settled here, I'm staying here, and it's confirmed that this is additional income. Or getting a co-signer sucks, but if you need more spending power, a co-signer will be there to help. Say, yeah, if this person falls on their mortgage, I'm gonna help them out. Yeah, having somebody on your mortgage in general can increase your spending power. So if you put somebody on your mortgage with your name, it can increase your spending power. So maybe like a double income, pretty much. So you can double what you were approved for originally. 3 is a larger down payment. Okay, so when you put your down payment down, if you're saying, let's say you get a $300,000 home, you're putting a maybe 5% down if you can afford whatever you can afford, let's say 5%. So it takes 5% from that $300,000 home, and that's what your approval is. So 5% is about $15,000. So you take that $15,000 and you subtract it from your $300,000 home that you want. So you're actually getting a loan for $285,000. That's what you're actually getting a loan for. So if you put down 10%, you're actually getting a loan for $270,000, which makes your monthly payments lower, which means you can afford the home if you put a larger down payment. Make sense? So the more money you put down, the less money you're borrowing from the actual bank, which means you can lower your monthly payments. So, does that make sense? I don't know. Ask me down below if you need more help to understand if you have a higher down payment. And if you go all the way up to, let's say, over 20%, you don't have to pay a PMI, a private mortgage insurance. So private mortgage insurance is an additional, like, 1%. I'm just gonna say 1%. It's like 0.8, something like that. So let's say 1%. It's an additional 1% on your mortgage monthly. Does that make sense? So, so if you actually put a higher down payment above 20%, it lowers your monthly mortgage because it subtracts that PMI that you have to pay, as well as lowering how much you need to borrow from the bank. So more down payment means less monthly payments. So option 4 is you can always wait for the rates to lower. So rates are a big factor in how much your monthly mortgage is, because it's the rate on the loan itself. So you can always just, if you have a well-informed agent, which you should have an agent that notify you when there's a big change in the mortgage rate, because mortgage rates can jump up 25.25 in a day. So it's good to have a well-informed agent saying, hey, right now the rates dropped about 0.220, so let's maybe call your lender to see what they're giving you and stuff like that. Keep in mind that rates fluctuate every day. But yeah, if you are actually not in like a tight timeline, maybe just wait it out a little bit and have rates to see where they go. Most of the, year, they'll fluctuate through like a whole 1% down or up. So yeah, just if you look at rates and watch a quarter a rate is a big difference on your monthly mortgage. So rates are a big deal. Watch out for them, and it can lower how much you have to pay a month, which means you can afford a more expensive house. 5, while we're on rates, you can always buy down your rates. So a buy down is generally 1% of the home cost, and you can buy down at a quarter at a time. So it's 1% of the home cost. So if you have a $300,000 home, $3,000 can buy you a quarter down. So, and I think it's pretty sure some are 4 quarters you can buy and then max it out, but a lot of them, I don't think they really have a max. So if you want to buy a whole point down on a $300,000 home, you have to pay $12,000. So, which can make a big difference in the long run, because that can save you hundreds of $1,000s in a 30-year term. So think about that too, and how much you really need to put down on a home. So do you want to put down more money, or do you want to buy down a rate? It's all matters of how it works for you. So if you're closer to that 20% down payment, I wouldn't buy down, right? But if you have more than enough of that 20%, where you can still put 20% down and buy down a rate, you're going to save so much money on your mortgage. So if you have enough savings to put 20% down, buy down a rate, and pay off your car note, you can get any house you want. So, but these are some things you can mix and match to lower your DTI and increase your spending power. So just take what you need out of the information I gave you, and hopefully that helped you get closer to buying the home that you deserve.